Good morning. Thanks for tuning in. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Vakil. Here are the headlines. Markets are seeing moderate gains in the first hour of trade. The Nifty reclaims 11,600. Most sectoral indices are trading with gains. Gas utility companies IGL and MGL are seeing a surge in open interest as traders take fresh positions in their respective futures. BPCL continues to remain the top Nifty gainer as crude prices fail to sustain near $70 a barrel. And Infosys and TCS are trading with positive bias ahead of their fourth quarter numbers today.
All right, those are the top headlines for you at this hour, and clearly all eyes will be on the two IT biggies, Infosys and TCS, as they come out with their numbers post-market hours. But let's tell you what's happening with the markets this Friday morning. It's a positive start after yesterday's lackluster trading session. Nifty is trading pretty much above the mark of 11,600. The futures premium has contracted almost 20 points from yesterday's closing of 72 to 72 points. Let's just pull up and check if there is any sort of build-up that we are witnessing on Nifty futures. No major build-up, almost up just about 2% as we speak. Bank Nifty is the other one where we've seen some positive action this morning, 35 points higher. Once again, the premium for Bank Nifty has also come off. 130 points is what we're seeing. And in terms of OI addition, it's up 4%. This morning, actually, there's been more action towards Bank Nifty. The open interest has surged just in the first hour of trading itself. And talking about the volatility, India VIX is also marginally in the positive territory, trading around the mark of 21. Remember, that's pretty high for India VIX. 21 levels is what it's quoting, and the market breadth is also positive. So as of now, the cues are looking pretty much good. But let's also tell you what's happening with the option side of the data. Now, this week expiry, which is on the April 18th, if you look at the maximum OI concentration, it's at the 11,700 call and the 11,600 put. So probably a range of 100 to 150 points is something that the market will be watching out for the next weekly expiry on 18. And remember, this is a short expiry. We've got a truncated week next week. There are two market holidays on Wednesday and Friday as well. So watch out. And in today's action, we're seeing some call addition coming in for 11,600 as well as the 700 strike. And in terms of put action, it is at the 500 as well as the 11,600 put strike. They've added somewhere between 1.5 to 2 lakh shares as we speak, Agam.
Well, it was a quiet weekly expiry yesterday, Navneet, but let's talk about some of those stocks because we did see a lot of stock-specific activity yesterday, and we're seeing a continuation today as well, especially in the likes of Ujjivan Financial Services, which is continuing to see build-up in open interest. Of course, IGL and MGL are the other two stocks which we have been talking about, considering an up move there with fresh buying coming through as well. Kajaria Ceramics is the other one, which is also looking at a 2.5% up move with buying through. Tata Global Beverages, while its spot hasn't moved too much, there is accumulation in its open interest, and REC is the other one which is also up in a bargain trade. In terms of unwinding, we don't have too much to speak for. But among the stocks which are looking at a decline in open interest, Diwan Housing Finance is looking at a little bit, considering it did move into the F&O band yesterday, so it is in the band today. And we continue to track well, the updates on this one as well, considering we have another ratings agency will downgrade a lot of ratings across various debt instruments as far as Diwan Housing is concerned. But not too much to speak for. I reckon, Navneet, today, once again, everyone will watch out for the build-up in TCS and Infosys.
That's right, and we'll discuss all those stocks on the show. But yesterday, we did touch upon Infosys, but today we'll be discussing TCS in more details with our technical experts. If you look at the activity on the option side, today we're witnessing a range of nearly 100 points, 2,000 put and the 2,100 call are the strike, which are pretty much active. The other stock, another Tata Group company, Tata Global Beverages, which perked up in yesterday's trading session. Some fresh longs were built up and they continue in today's trade as well. The stock's, by the way, inching very closer to its 200 DMA as well. Adani Power comes out of the F&O band, so today it is traded. In fact, you can roll over your positions if you wish to, if you're taking any trade in Adani Power. We will be discussing that stock as well, as after coming out of the ban, open interest has surged for this one this morning. Agam.
Well, okay. Well, on that note, let's get in our experts for the day. But before we do that, here's a reminder. You can, if you have any queries on futures and options, you can call us on 022454044141. And of course, write to us on YouTube, Twitter, and Facebook with the AskVQ hashtag. Let's get in our experts for the day. Then we have Nilesh Jain of Anand, Rathi, and Gaurav Bissa of LKP Securities joining us. Good morning to both of you, and thank you for joining us. Gaurav, let me start with you. We're looking at, well, benchmarks now starting to give a little bit of sideways movement of late. How do we address the markets from here on?
Good morning. Overall, Nifty is expected to be in the range of 11,550, where we have seen multiple times small bounce back sort of coming in. And at 11,740, we are seeing small reversals also coming those for last two trading sessions. So overall, it's going to be in the range. At the current juncture, I would say that I would recommend buying on dips at levels of 11,580, target of 11,700. If you look at the monthly call option, for the reason that weekly we have seen some volatility, but if you look at monthly series, 11,500 put option commands a very high concentration. It is the second highest OI concentration, and it's a meaningful strike. The next highest is at 11,000 mark. So this being a very near about strike and still showing good amount of trading happening even on days when Nifty is falling, it generally shows that for next few trading sessions, Nifty might slip a little bit lower, but it's unlikely to break levels of 11,500, 520. So on that premise, I expect the range bound move to be continued. So for me, Nifty as well as Bank Nifty are buy on dips. For Bank Nifty, it would be 30,000 would be target. You buy around levels of 29,800 and keep on point stop loss.
Okay, so those are two strategies on Nifty and Bank Nifty coming in from Gaurav. Nilesh, would you also suggest buying on dips?
Absolutely. Good morning, everyone. The range is clearly defined, 11,550 to 11,700. This is almost 150 to 200 point. There is a range in the Nifty. From last 10 trading sessions, we have seen Nifty stuck in this range. We need to wait for a fresh breakout for the fresh momentum. As far as any trade is concerned, I think clearly 11,550 is the level where Nifty is finding support. So if you get any dip, that should be utilized as a buying opportunity as long as Nifty holds above 11,550. But the upside immediate target that I'm expecting is of 11,680 to 11,700. That is the level we can expect. If you look at the derivative data, as you have mentioned, 11,500 on the put side, we have seen huge amount of put writing that also holds the maximum open interest as far as weekly expiry is concerned. Whereas on call side, 11,700 is one strike where the maximum OI has been placed. So call writers and put writers both are active at 11,500 and 11,700. So this is a 200 point range. I would suggest utilize every dip as a buying opportunity with a stop loss of 11,550 for the upside target of 11,700.
Okay, well, that's Gaurav's view as far as the Nifty is concerned, but pardon me, that's Nilesh's view as far as the Nifty is concerned. But Nilesh, if I'm not mistaken, you do have a bull call spread on the Nifty. Before I come to you on that one, let me explain to our viewers what a bull call spread is. It is employed when one expects a moderate up move in a security or an index for that matter. In this strategy, a call of an option of a certain strike is purchased and a call option of a higher strike is simultaneously sold. On that note, Nilesh, if you could actually take us through your strategy that you're employing on the index too.
Yes, you have rightly mentioned I have bull call spread in the Nifty. We have seen, like I mentioned, Nifty has an immediate support near 11,550. So as of now in the market, considering the volatility, so I think the best strategy should be utilizing a bull call spread, buying 11,600 call strike. One lot one can buy somewhere close to trading at 80 rupees. Whereas one can sell one lot of Nifty 11,700 call strike at 35 rupees. So overall spread is coming around 45 rupees. Whereas the maximum reward one can get is of 55 if Nifty expires at 11,700 or above that. So that maximum risk is clearly defined, which is of 45 points. The maximum reward is of 55 points.
Okay, that's a bull call spread coming in on Nifty from Nilesh's side. That's about the indices, guys. But what about the stock-specific strategies for the day? Gaurav, if I could come to you, I believe you've got one long and one short call for the day.
Yeah, right. The rationale being that as we discussed and we have been discussing for last few days, that Nifty is stuck in the range and it does not make too much of a sense to be aggressive on only one particular side of the trade. And on that rationale, I would recommend buying Glenmark Pharma. This is one of the most stable names. Pharma has been quite okay in comparison with some of the other sectors that have been quite volatile. Among that, Glenmark Pharma has been finding decent support at level of 640, 645. We are seeing minor longs getting built in the name. One can play for target of 670, keep a stop loss of 648. Godfrey Phillips, we saw strong move coming in from levels of 1000, 1020 to around levels of 1150. Last few trading days, there has not been significant addition happening in Godfrey Phillips, even when it was going up. And now some amount of unwinding can be expected. A small stop loss of 1152 and a small target of 1110 can be used for Godfrey Phillips.
Okay, so that's one long and one short. Long Glenmark and short Godfrey Phillips. So that's Gaurav's call. Nilesh, how about you? What stocks are you betting on today?
Yes, so I'm expecting a bit of pullback rally here from in the market. So I have three buy positions, buy ideas, starting with the REC Limited. We have seen a build-up of close to 5 to 6% of open interest. It has provided a fresh breakout from its symmetrical triangle pattern. So the target for the same is coming around 159 to 160 rupees. One can keep a stop loss of 150. So REC Limited looks good at current level as well. The second buy recommendation is on the counter Bata India Limited. We have seen it has consolidated from last 4 to 5 trading sessions. Now it has provided a fresh breakout. Also, we have seen long build-up of position close to 7% OI build-up has been witnessed since morning. So Bata India is a buy with a stop loss of 1390 for the upside target of 1425. My third buy recommendation is on Maruti. Earlier we have seen a couple of trading sessions back, it has provided a fresh breakout from its downward sloping trend line. Now the stock is in consolidation mode. The probability or the chances are very high it will break on higher side. I would recommend buying 7200 call option at CMP with a stop loss of 120 for the upside target of 240.
Okay, three long strategies from Nilesh, Maruti, Bata as well as REC. Let's switch focus and talk about the stocks which Agam and I want to take view from our experts. And Agam, topping the list today will be the biggie, TCS, which comes out with the numbers. Yesterday we were discussing Infosys, but looking at both the stocks, I think Infi does have that comfort when it comes to valuations, because if you compare both the companies, I think TCS is trading at somewhere 20 to 21 times on FY20 earnings. But tell us one key takeaway that you'll be watching out from the numbers.
Okay, so as far as the TCS is concerned, I'm keeping an eye on the total contract value. Because that will give us an indication of how the company is going to do in FY20, at least in the first couple of quarters. And they don't give us a guidance for revenue, but margins is something which sticks out for both TCS as well as Infosys. So again, for in case of Infosys as well, I'm going to watch out for what they guide for in terms of margins.
Next financial year.
For the upcoming financial year. And some brokerages are of the opinion that their margins range could come off by as much as 100 basis points.
Okay.
Besides that, it's going to be business as usual. We all know about the kind of big deals that both these companies have signed over the previous 9 months. So these are the two essentially most important areas that I'd keep an eye on.
Okay, guys, so watch out for the guidance that they give you for the next financial year and also the margins. But looking at the data, the trends, if you look at the options data, let's just pull up the plate in terms of active strikes for the day for TCS. Remember, the maximum OI concentration is at the 2100 call and the 2000 put. The stocks at 2028 for the day. There are 3 strikes which are pretty much active: 2100 call, 2000 put and 2050 call as well. Let me take this question to Gaurav. There are a lot of traders who are interested, before the earnings to execute some bit of option strategy when it comes to TCS or Infosys. Looking at the trends, because last 3-4 sessions have been more about profit booking when it came to TCS and Infi. Any strategy that you have, or if not, tell us what's the view on the stock?
First, the view, if you compare, like few minutes back, you were talking about the comparison between an Infosys and the TCS, and it was on the fundamental aspect. As far as data and the charts are concerned, in that front also TCS is looking relatively better for the reason that it's not trading near the strong support area of 2090 levels. So, and as you already mentioned, 2000 put option commands the highest concentration in the put side, and that again, suppose the positive, we may see a 10-15 rupee dip, and that would make it more lucrative. I don't see a strong correction sort of coming in. And if somebody wants a strategy, I would recommend buying a bull spread for the reason that ahead of event, we generally see IVs getting inflated. And once the event is out, even if there's a small move, you don't make money because the IVs start seeing erosion. So on that front, one can buy a 2050 call option quoting at 42, 43 and sell a 2100 call option 25. So you have a maximum 15, 16 rupees that can be lost. So you can deploy the strategy. I expect a decent move. I'm not saying that there will be a strong move. It would depend on the outcome of the numbers, but As far as data is concerned, charts are concerned, we can expect a jump towards level of 2070, 2080.
That's a very interesting strategy on TCS that Gaurav has mentioned, considering he's recommending that one buy a 2050 call and simultaneously sell a 2100 call as well, because of his expectations, given that considering as we move and run up to the earnings, well, the IVs are high, and as soon as the event is out of the way, the IVs will eventually fall. But Nilesh, let me take this question up with you as well. How would you play both these, or even one of them, if you have any recommendations of your own? How would you typically play the earnings when it comes to these two information technology companies?
Well, I have a similar view. If you look at the technically, TCS has a support of rising trend line, which is coming around 2000. If you look at the derivative data, the maximum put writing that is happening in 2000 put strike, whereas on the call side, we have seen build up a position in 2100 call and 2050 call. So overall, if you look at the IV, which is currently at 33 levels, we have seen in the past over the years the upside threshold that in terms of IVs is 35 to 36. After the event, the IVs cool down towards 22 to 20 kind of a level. So there could be a sharp correction in terms of IVs concerned. So we can expect some cooling down of IVs that may affect the option pricing. So I have a similar strategy. In fact, the same strategy I would like to recommend: buying 2050 calls and selling 2100 call is a safer strategy in terms of time decay as well as implied volatility falling is concerned. As far as both the counters are concerned, I think TCS could be better counter to trade at current level, since it has a major support level at 2000 level, which is trading somewhere close to that. So as far as trades are concerned, I would suggest going long in TCS. And as far as Infosys is concerned, I'm not getting any clear view, but yes, there is a clear support of 730 levels on the downside, whereas immediate resistance is at 765. So out of both the counters, I would like to go with TCS.
Okay, that's a call coming in on TCS. And guys, if anyone's executing any option strategy with regard to Infi or TCS, a very, very pertinent point highlighted by both our experts. The IVs tend to collapse post the event is out. And no matter you're on the right side of the trade, but because of IVs falling, you may just see the premiums not moving. So keep that in mind before executing any trade. All right, moving on to another Tata Group company, Tata Global Beverages, that was up in yesterday's session. There were fresh long positions seen on the futures side. And this morning, OI build-up continues 9% higher, but no major stock movement seen in this one. But remember, it's inching very closer to its 200-day DMA, which is somewhere about 220 to 221. Gaurav, on the charts, would you suggest to take any trade from Tata Global Beverages?
For Tata Global, there is a wonderful trade that one can look at, and it would be a position trade. At 214, no, probably no. Around levels of 210, one can buy, keep a target of 220 to 225, keep a stop loss of 205. It has been finding strong resistance at levels of 200. If you go back a few days or few weeks and few months, you will see a lot of writing was happening in 200 call option, comfortable writing happening. It's now trading above these levels quite comfortably. That has now seen a support, good amount of writing happening in the 200 put options now. It's given a breakout from falling trend line on daily as well as weekly charts. So as long as trading above 210, we can expect a strong move coming in the name. So for me, a small dip and it would become very lucrative.
Okay, a small dip and Tata Global Beverages would become lucrative, considering a change of a reversal of sorts as far as the 200 mark is concerned. That is the 200 rupees per share mark for Tata Global Beverages is concerned. But with that, let's also talk about another stock, and that's Adani Power, because it's again interestingly poised. Well, you know, what's typical of Adani Group companies is that it's extreme. They're all very, very volatile. And but that said, if you leave that aside, Adani Power has moved out of the F&O ban. And what we're actually looking at is a little bit of an increase in open interest. Let's not forget that today it's up and about. And in fact, it's seeming bullish over the previous couple of sessions. So let me take this up with Nilesh. Nilesh, how would you address Adani Power from here on?
See, chart structure looks very positive, but at the same time it has a major resistance. If you look at overall from past 3 months, it hasn't surpassed the level of 53, so that is going to be the immediate resistance. Today we have seen some sort of a quite up move, but we have at the same time we have seen profit booking at a high level. I would be interested in closing that should be above 53 levels. If that happens, then we can expect a up move to continue towards 60 kind of a levels as well. So yes, overall chart structure look positive. If one has a long position, then can remain long with the stop loss of 48 to 49. These are the support areas. So overall it has provided a fresh breakout, but I would be interested in closing that should be above 53 levels.
Okay, so if you have a long position, you can continue to stay long, but remember you can place your stop loss somewhere about 48 to 47. Quickly moving to the queries that we are getting on our social media platform on YouTube. Tarun Arora writes to us, he has a query on NCC. He's got a position on 105 call option for which he's paid a premium of almost 5 rupees. Let's check what the current premium is right now. I think it's at the money strike because the stock also is trading somewhere about the same levels. It's above that 106, so 4.9. Gaurav, what do you think he should do? He's paid premium of 5 rupees. Currently it's at 4.9. Should he stay put?
As far as the stock concerned, when you keep a stop loss of 103.504, and it can go towards a level of 108 to 108.5. But I would also like to add one more thing. When you are buying a call option, the whole idea behind buying a call option is that you should be losing less amount of money, and generally avoid using at the money options when it comes to high beta names. If you are playing with stocks like NCC, which is a very high beta name and can move 10% in a series also, always play for out of the money call options. So in case if you don't see a good move, if there's a consolidation, you will not lose too much because at the money would have a very high premium. And once at the money is getting crossed and it becomes in the money, it tends to move like a future. So your premium will also not move in tandem with the kind of move that we have seen in the underlying. So for me, for now you can hold, but in future try to play with out of the money call options.
Okay, a valid point out there. Tarun Arora also has one more query, and Tarun will come back to the query if we do have more time. I'm going to move on to the next one. We have Satya Sriram, and he wants a view on Titan, and I think this is to do with a specific call at 1160. So I think it is the 1160 call that he wants information on. It's currently trading at 6. That's the premium. But it's a tad away from current market levels. It would require about a 5% up move from, CMP, considering Titan Company is currently trading at around 1102. That's where its underlying is. Nilesh, how would you be positioned on Titan Company, and what would you do with this specific call of the 1160 call?
Well, if you look at the overall structure of the Titan, it is in the consolidation mode and it has formed some sort of a base around 1080 levels. So yes, from going forward, we can expect some sort of a consolidation to continue. Overall, medium to long term perspective, the chart looks good. As far as 1160 strike is concerned, I would suggest if you have already position in that, or if you want to initiate a fresh long position in 1160 call, so avoid as of now, because it is far away from the CMP as of now. So it is deep out the money call that he's looking for. So I would suggest buying 1120 call instead of 1160 call option. I'm expecting after this consolidation there could be some sort of a breakout on the higher side, maybe towards 1120 and 1130 kind of a zone.
If you've not executed the trade, Nilesh is suggesting to buy the near-term strike, that's 1120, and not out of the money 1160 strike. I'm quickly moving to Torrent Pharma. Sapna writes to us on YouTube. Sapna wants view on Torrent Pharma. Since it is in the F&O space, let me take Gaurav Bissa's view on this one. Gaurav, I think on Tuesday the stock had a move of nearly 4%, but post which I think there's been some profit booking which is kicked in. But overall, what are the charts suggesting for Torrent Pharma? Would you recommend taking any position here?
I would wait for a small dip. It is trading near the crucial support area. The immediate support or the crucial support for this is around level of 1780. So a small dip of towards 1800, 1795 can be utilized. Have a 20-25 rupees stop loss on the upside. The bounce back can be around levels of 1835, 1840. So I would wait for a dip and also be a little bit cautious as far as position sizing is concerned, because below 1790, 1785 things can go a little bad for the name and it can slip towards lower level. So for me, wait for a dip, only then you buy.
Okay, wait for a dip and then look to enter into Torrent Pharma if you've not taken a position. In last 1 month, the stock's not done too much. It's just about flat. Let me take a query from Facebook. Ram Hegde writes to us. He's suggesting he's got IDC May futures at 301. What should be the target price for him is something he wants to know from our experts. Nilesh, ITC May futures, these are the April futures which are 300. He's got the May futures at 301. How are the charts looking? Would you suggest him to continue holding his position? If yes, what sort of target can he expect on the upside?
Well, overall chart structure looks quite positive. Earlier we have seen in the past couple of trading sessions it has formed a base somewhere close to 290 kind of a zone. From there we have seen every time buying interest coming in at a lower level. It is on the verge of a breakout. The breakout level is placed around 301, 302. The chances are very high these stocks may break above that in the April series only. On the upside, the target that I'm expecting is of 310 to 315. So he can remain long in the strike that he bought for the upside target of 310.
Okay, I think we have time to take just one more query. So I'm going to take one up from Akshay. And he wants a view on Engineers India. Well, Engineers India is currently trending marginally higher. Yes, actually it's up around 1.7%, but there's also unwinding coming in its open interest. Okay, so Engineers India, if I'm not mistaken, yeah, there you have it. That's up 1.5%. Its open interest up around 1.3%. This is April futures. Gaurav, very quickly, how would you trade Engineers India? What stands out for you here?
I would not trade over here, and there are two reasons. One is it has a good support area at levels of 100 and 5. So if somebody wants to play only on future any positional front and dip towards 112, 13 can be bought. As far as with futures is concerned, buy above 121, 122. This is the reversal area, and a small breakout would be seen above 121, 122. If it is sustained, levels of 126, 127 can be expected. So buy either at higher levels or breakout, or for positional trade, buy on dips.
Okay, unfortunately, guys, we have run out of time on the show, so we're going to try and take your queries up perhaps in the next show, and if we can also take them up on Ask BQ. But on that note, I'm going to take a moment to thank both our experts, Gaurav as well as Nilesh, for joining us and taking us through their views on the markets. For more updates on the F&O space, you can also check our website out, bloombergquint.com, specifically the futures and options pages. And that's a wrap on this edition of the F&O Show. But for more news and updates, stay tuned to Bloomberg Quint.